Hello and good morning, folks. It's the RBI MPC day, and this is Swaraj bringing you the latest updates and expectations through Almus Market Mornings. Now, before I move the global bits, I'd like to put focus on our domestic updates. The central bank would be hiking rates today, and the broad market expectations are to the tune of 50 basis. But it's quite interesting to see the kind of macro updates we are getting. A robust tax collection has put reduced borrowing pressure on the center, but the current account deficit stood at $23.9 billion dollars in April to June quarter. On the global front, currency started moving again with equities going both GBP being influenced by both the government and the central bank as entities are having different ride altogether. Really like the bit from the currency market participants who mentioned Bank of England is now driving a car with an accelerator pushed, which is raising rates, and handbrakes pulled, which is buying gilts. Don't know where the car would go. What's your take, JK?
Hey, good morning. Let's start with the pound actually. It has made an impressive gain, or I would say retracement, and back at where it was before the mini budget was announced. And a lot of it was due to an announcement saying that UK PM will hold an emergency talk with the budget forecasters on Friday. So there have been calls from various quarters for rolling back some of the tax cuts they have announced, while officially they have denied. But I think this meeting will probably assume a lot of significance. And now that the authorities have shown some serious concern about the market turbulence, I think speculators are also paring back their bets against the pound and the UK money market. So interesting to see what will happen. China was not out of the limelight yesterday. Again, the Chinese central bank was reportedly asking its state-run banks to be in preparedness for intervention, obviously expressing their displeasure at the way the Chinese yuan was moving. Actually, China is going into a long holiday from 1st October to 7th October for Chinese National Day, but this move by Chinese central bank yesterday has actually put some caution into the traders, and Chinese yuan strengthened by more than 1.5% from 7.26 to 7.09 at one point of time. Now currently trading at 7.12. Euro also piggybacked on the GBP rally, but there were other factors too in euro, because German inflation came at multi-decade high at double digit, and confirms that the ECB will hike rate by 0.75% in their upcoming meeting, if not before the meeting itself. And Lagarde has been very hawkish of late, saying that there will be hikes in the rates at several upcoming meetings as well. So apart from that, we always see a lot of euro buying on month ends, and this being a quarter end, that is also helping. So the combination of profit taking, short covering, and also the flow related moves, plus the central bank influence that has been moving the major currencies to recover against the dollar. But if you look at the dollar position itself for the US economy itself, the data has been superb, and the jobless claims came at 193,000, 16,000 less than last month, and it was much better than what was expected. And this is the best data that was seen since April of this year. Then it confirms, Powell's statement that employment situation is doing extremely well, and therefore the US economy can withstand more rate hikes, and to slow it down and then achieve a demand side inflation to be controlled. US GDP data for second quarter and third reading or third estimate came finally at minus 0.6%, well as expected. But if you look at the components, at least for the second quarter, I mean, it's backward looking, but still it confirms that consumption was very strong, and the prices paid were also very high. But since then we have already moved 3 months, so it doesn't hold much of a significance. Importantly, the gross domestic income, which is now on the focus along with the GDP, because GDP itself is minus, but GDI has been on the positive side. People tend to look at the average, and the average has been slightly slipping. So we'll have to see how it pans out in the coming quarter as we end this month of September. Fed members continue to remain super hawkish, so stock markets are now not able to sustained any rally. Dow was down 1.54%, S&P 2.11%, but still holding about that key 200-week moving average. And the Nasdaq was down 2.84%. A news that was probably not much on the radar of the traders was the possibility of a government shutdown, because spending spending approvals will be expiring, and now bill has been passed to approve the additional expenditure till December 16. This is the usual saga that goes on in the US. Come back to India's monetary policy and the rupee itself. The rupee, of course, took some heart from the fall in the dollar against other major currencies, particularly the yuan. Tried to break a 81.95 yesterday, but RBI was there very much to avert any further fall. But once the Chinese yuan started strengthening, rupee also started stabilizing, and in offshore trades we saw it as low as 81.45. Since then, it has moved to 81.65. But if you look at the policy, I do not expect any major influence from the monetary policy itself for the rupee, because the challenges for the rupee are linked to more other factors than the monetary policy. Economy is definitely doing much better, but less than expectations. Fiscal deficit is within expectations, and revised GDP projections are likely to be lower by 30 BPs than the previous projections. This is par for the course, because globally economies are facing a recessionary pressure, and the pressure on our exports will be there, which actually brings down the GDP number. I don't expect a change in the inflation projections for FY23. Probably FY24 will be slightly revised lower. So the front loading of interest rate 50 basis point hike is, as most in the market expect, will be on the cards. Anything less than 50 basis points will be negative for the rupee, and probably will be negative as far as the RBI's credibility is concerned. But they would also like to see that rupee's attractiveness is maintained, though the actual yield difference between India and the US has been shrinking and it is at a 12-year low now. But still, because of the India's growth potential, we have been getting attention of the global investors. I think rupee at 82 is a very crucial level. We have completed 6 months of this financial year today. Will be completing rather, and rupee has depreciated 9%, and almost following other currencies directionally, which is quite large. But there have been unique headwinds today, too, because of the fallout of the Ukraine war, particularly on the energy prices and the trade deficit. We expect some consolidation in the rupee for a month, at least, possibly between 80.5 and 82. After such a large move, and look ahead to the evolving global situation, particularly on the major currencies for the next direction. We will update on the policy soon after it is announced at 10 a.m. Today through our communication. Thank you.
Thank you, JK. And as JK mentioned, challenges to the rupee is more linked with other factors, global factors. As monetary policy, going into the monetary policy, we are expecting, the market is expecting a 50 basis hike, which is well discounted. And of course, from a Chinese yuan perspective, there has been some talks of intervention, and we are also seeing rally in euro and pound. Also German inflation, which came in at a multi-decade high. So a lot of developments coming in. We can expect a lot of volatility in the currency space going forward. So keep managing your risk. That's it from us today.
Swaraj, just two things would like to keep the audience informed. We'll have a PC inflation from US also today, which will be closely watched. As of now, the estimates are that core PC inflation for both month-on-month and year-on-year will be higher than last month. That will not be a good news for the markets. And also, we have a scheduled speech by Putin, Russian President Putin, at 3 p.m. Russia time. So again, market will be very keenly looking forward to it.
Okay, thank you, JK, for that added points. And of course, I can't help but just go back to the past. Even before the Fed meeting, we had a Putin speech, and now before the RBI meeting, we have another Putin speech. I hope, I hope that there is no stealing of show which happened like last time. So guys, keep watching the currency space. It can get volatile. That's it from us today. We'll see you all next week. Thank you so much for listening.